Felix here, and what a week it has been. In fact, what 2 weeks it has been. So we are going to do a monster review of stocks here as we do every weekend. And I've this time put every single stock I'll cover here into the free benchmark down below. So go to felixfriends.org/Monday and you can download it, or just make a note of it and download it at the end. And then you also get some fundamental numbers here, not just the here and now. I also want to encourage you, if you're only going to do one thing today, sign up for the free webinar. Do you want to make 2022 the best year ever? If the answer to that is yes, join me for the free webinar. It's going to be completely free and jam-packed full of insight, planning, portfolio strategies, which sectors to target, and much, much more for 2022. So that's coming up next week, and the spots are filling up quickly, so don't hang around for too long. With that out of the way, and with me having said that this is not financial advice as usual, this is for entertainment, I beg you to be smart and check facts as usual. I'm going to show you my cheat sheet. Can you see that here? This is what I've done. I've put little numbers on them because there will be 17 stocks here today, which is way more than I could remember. And in the following order, I'll be doing them, and I'll put the tags down below. Palantir, Apple, DocuSign, making a first-time appearance here, PayPal, Visa, Amazon, Zillow. Then we go into the EVs with RIVN, Tesla, NIO, Polestar, Facebook, NVDA, Square, SOFI, Alibaba, and DIDI. So we're ending in a little bit of misery and possibly excitement. So that's the order that I will work through this. And as I say, you are, of course, welcome to jump about, though you will miss some of the connecting stories there. I do try and theme this in a logical way. I want to start off just with a little bit of economic data here that we have. Well, one, it's Christmas, and you can now give the gift of financial freedom. So go to felixfriends.org/gift or scan the little QR code at the bottom, and you can do that also. But we had some data out on Friday, which was that the US farm payroll, the non-farm payroll, and the private payroll were massively disappointing. So we were expecting the US economy to generate about 500,000 jobs in non-farm payrolls, so non-agriculture, and they generated 210,000. And the private sector seems to be at fault here. 590,000 is what we were expecting. We got only 235,000. And at the same time, unemployment rate went down. So one of the most confusing sets of numbers I've seen in a long time. What does it mean? Well, it has the market worried that maybe economic growth is either slowing down, or that there is such a labor shortage that we are just not able to hire these people, that they're not out there, or they're not willing to work because, they're on YouTube or something ghastly like that, and they've found a private side hustle and they no longer need to go and sit at a 9 to 5. And that would create more inflationary pressure. Now, add on top of that what Jay Powell said. I always want to say Greenspan. I just grew up with Greenspan, but no, it's Jay Powell, giving away my age here. He basically said, look, this new virus is a concern, but we're basically going to steam ahead with our inflation fighting. He's retired the word transitory, surely the most hated word of 2021. So he's basically admitting inflation's here. It's here to stay. It could get worse. So that also has markets worried. Now, to take this one step further, let me show you this chart here. What happens when the US 10-year yield goes down? And this is what this is. So when the whole inflation thing kicked off earlier in the year, in February, and the kind of growth market took a bit of a knock, the US 10-year Treasury yield went up because people were expecting inflation. So why is it now coming down when we are still in the middle of inflation? It's because people are fleeing stocks, and they're putting their money into a safe haven, and they'd rather take 1.34% than nothing in their savings accounts. So that's exactly what's happening here. So we've managed to bring the bond yield down from 1.67 to 1.34. And the way you look at that is basically supply and demand. If more people demand it, the yields go down and down and down because the price of the bonds themselves go up. So that's the logic there. If you want to know a lot more about that, by the way, you can come and join this week only. We've just opened enrollments. Master Stocks program is open again. Lots of economics in there as well, but practical economics that actually makes you a smarter investor, because I used to be an economist. 29% off. Build Wealth is the coupon. It'll only be available for this week. So go to felixfriends.org/stocks, and it takes you to a website like this where I explain what it's all about, and I show you all the content of all the parts of it. So lots of advanced investing theories, timing the market, lots of technical analysis, practical economics to make you money, how to profit from investor psychology, very, very important in weeks like this, how to turn the whole thing into lots of wealth, and much, much more. Of course, also a beautiful, supportive community with me at the helm of it. Now, make sure you download the benchmark, which will look a bit like this for all of the stocks we're talking about here. So I think that we should dive straight into this here. So this is QQQ just before the stocks, and just so you can see here, 2 red weeks. Last week was 2% down. The week before, 3% down. So that's a weekly chart. And you can also see we're sort of falling out of our long-term purple trajectory here. And I'm going to change this back to a day chart. Otherwise, I'll do the whole thing on a week chart and I'll be none the wiser. We wouldn't want that now, would we? So yeah, a bit of a hideousness here last week on very, very strong volume. So when you get these trends where the stock, or in this case, the QQQ, NASDAQ goes down and the volume goes up, it kind of makes people spooked because it implies that this rally downwards, this sell-off is only just begun. Having said that, it does look like institutions are loading up the boat down here. You see that trend. So they tend to have a longer time horizon than us. The SPY chart looks very similar, so I'm not going to show you both. So let's start then with our stocks. Palantir is the first one, having a truly horrible time since the 9th of November. 1895 is where we're at. Could it get much worse? Good question. They reported literally 2 great new contracts just 2 days ago, and the stock sells off more. It's really deeply in the midst of the sell-off. My theory here is a lot of this is tax loss harvesting, because I look at my portfolio and it's been a great year for the year. Most things have done very, very well. Only a handful of stocks that haven't. Palantir is one of those. So if you are in the US, you have to pay taxes. You can offset your taxes by realizing your losses. I think that's got a lot to do with this. But certainly there is a lot of pressure on this down here, and I think it is not unlikely that we're going to hit the lows again for May, which were about $17. So I think really all metrics look bad here. Insider selling continues. Institutions appear to be selling off. Momentum is not horrible, but at minus 2.5 down here, also not exactly positive. So just not a great momentum story on Palantir. Fundamentally, nothing's changed there whatsoever. So it really just depends on your time horizon. I'm doing absolutely nothing with Palantir at present. And what have we got here? Apple. So Apple has had a decent week, really, in light of everything that's gone on. We had a bit of a jitter earlier, and then Friday we were just down 1%. Why is that? Why are we seeing here on our dark pool indicator what looks like institutions going into that? Because it's perceived as a safe haven. It's an incredibly profitable company. They have lots of cash and they're generating lots of cash every single second, very loyal user base and so on. So there is a benefit in being in these kind of value tech stocks. I call them quality stocks. And yeah, it's taking a little bit of a beating, but still momentum is actually positive. This is here, the green line, the 0 line, and look, the blue indicator is momentum, so still looking very positive there. So it is actually a safe haven. DocuSign, on the other hand, the opposite of a safe haven, closed down 42% on Friday. Is that an overreaction, or is that an overreaction? I would say, at least that's my view. Why is that? Because they reported, look, this is the report on their earnings. They reported the earnings the day before. RBC, for example, lowered their price target to 220 from 345. So that's down about 30%. The company reported a weak fiscal Q3 with billings falling below guide, leading shares to close down more than 30% in pre-market. Revenue and earnings per share exceeded consensus. So the kind of headline numbers look good, but the stuff below it was hideous. And they are worried about competition from Adobe and Dropbox. DocuSign's expansion effort may not materialize. International risk acquisitions undertaken by the company can distract management or prove unsuccessful. And lastly, DocuSign could be viewed by buyers as a feature, not a standalone product, leading to pricing pressure. So pretty hideous review there from RBC, the Canadians, and the stock really, really going down with that. So they gave a price target of 220. I mean, it fell to 135, which is perhaps an overreaction. I suspect it is an overreaction, but it is what it is. I mean, I can't judge because I haven't properly dug into this, what advantage DocuSign has, say, over Adobe Acrobat or Dropbox. I use both of those, and they're both very good products. So I personally wouldn't go and sign up for a third one. And a lot of corporates also use both of those, or Box or something like that. So it's going to be a more competitive space. I think the question is, can they build out their portfolio of products into such an offering that they become essential, like Adobe has managed to by creating the PDF essentially. Now, moving on to PayPal. Still my biggest holding, and I'm going to buy some more on Monday, just to give you that heads up disclaimer there. They have they found a bottom? Well, hard to say. 183. We had a little bit of positivity here, but basically moving sideways, and that's kind of nice to see. 2, 4, 6, 8, 9 days essentially we closed pretty much at the same lows, slightly even above the lows of the previous 3 days. There does seem to be lots of institutional money pouring in. Momentum is still pretty hideous for this, so don't expect a quick turnaround, but it does seem to be finding its feet around the $180 mark as a support line here. Okay, so what's next? Visa, right? Visa also having a very, very similar chart. You could be forgiven for thinking it's the same one. What happened to them on Friday? Down 1%. The day before, they had a recovery of 4%. So what appears to be what institutions are doing down here? Well, massive, massive buy-ins. Why? Well, look at the numbers. Seriously, look at the chart I've done for you at felixfriends.org/Monday, this one here, and look at that benchmark and you start to understand. Companies like Visa, MasterCard have something like 80-90% operating margins. They're absolute money printers, largest financial company in the world. So will they have some headwind? Will they lose some of their business to, say, a PayPal or a Square or something like that? Or, blockchain companies and so on in the long run? Yes, probably. But will they still be around? I very much think so, just because they generate so much cash. They can also buy themselves some innovation. They don't come up with it themselves. Amazon, surprising, because we had these kind of terrible earnings and the stock tanked. And then everybody was like, well, that's really bad. The quarter is going to be awful, and supply chain problems and so on. And then it rallied up. And then this new COVID thingy came around, and then it crashed again. And you're sort of thinking, what was the one stock that did really, really well during the last COVID pandemic? Amazon. So it's kind of a bizarre one. It's just being dragged down by the whole market. Not much movement here from institutions, and momentum going absolutely into, they're basically mining for crypto or something down there. Okay, what I tried to put in here as 0 is 11. Why? Because momentum down here is at like 350 or something like that, 312. That's negative 312, which is pretty unheard of and truly, truly horrible. So this sell-off appears to be not quite over yet. I have actually added Amazon to my portfolio over the last few months, so I think I'll take the opportunity to add some more. Zillow having a little bit of a recovery here. So what happened to Zillow? Well, I think we all know about that. If you don't search Felix Zillow, you'll find a video from myself on the subject. But what you can see quite clearly is that we got support here at $52. Let me just close out the left chart so you're not too confused. And it obviously left its 100-day moving average far behind up here, but we can see essentially $52 is sort of a support here. It looks a bit like PayPal's chart. And then we get a nice jump up on Friday, 11% up. Any particular reason for that? Well, this came out on the 4th, just Decade of underbuilding has resulted in a massive home construction shortfall and limited inventory, fueling prices during the pandemic, according to a report by Zillow, which people might interpret as maybe they can get a little bit more money for all that duff inventory they have. They are also winding down or making significant progress to wind down their inventory, and they're going to launch a $750 million share buyback program. Does that make me want to buy the stock? No. I think it's a management in desperation, quite frankly. I think the CEO needs to go. He was the one who championed this madness program and drove it to incredibly large scale without realizing that they were incurring huge losses on each home bought and flipped. So I think he needs to go rather than throwing $750 million out of the window. I don't think that's really going to achieve much, but obviously stockholders like it. So it jumped up 11%, and that's where we are with Zillow. But I think they need to fundamentally go back to their old business model and come up with something different, and probably come up with a different CEO. RIVN trying to find its feet on what is a sort of fair price point, sticking very nicely above the $100 mark here. So let me put in a little line here, the green line there, and a little tag, and you can see that is basically $100. People seem to think that's fair value for RIVN. At the moment, it's priced at just over 90 billion market cap, so still pretty significant. And I think really IPOs tend to look like this. You tend to get a spike. You tend to find a bit of, where is support for this? And at the moment, it's $100, but who knows? It's only one day, so it isn't the strongest support that we've got there. Tesla. Looking a bit better, I would say. Tesla is kind of bouncing up and down a bit, but in a fairly narrow range here. So if I was going to put a little, may I have a line? I think I may. If I was going to put a sort of yellow shaded area above that here, we are sort of between $1,000 and $1,160 or $1,150 or so. That's kind of the range we are in at the moment. We seem to be a little bit range bound here. Sort of makes sense because we've had a massive rally previously. Momentum has slid into the negative territory on Friday, but then that's just the market. So we had 3 days in a row. We sold off about 11% or so there. We are still very nicely above the 100-day moving average line down here, and that just goes to show how far and how quickly Tesla has risen. Volumes were not unusual, so that makes me feel more confident that this isn't going to completely fall off the cliff, because we don't see the massive spikes implying, and there's also no massive increase in volume here. So I think that's pretty good. NIO, on the other hand, getting hit by this DIDI story and the SEC delisting story. I'm not going to get into all the details. Go and watch my delisting video from, I want to say, Friday or Saturday, and I take you through the details without all the fear and the FUD. There is a significant risk to Chinese stocks. It essentially is a political issue. The politicians need to fix it, probably the Chinese ones rather than the American ones at this point. I think the US has spoken, and I think they'll continue to negotiate. Hopefully they find a resolution. If they don't, it's going to hurt all Chinese stocks quite significantly. So this is one of these charts I was alluding to earlier. Falling stock chart, increasing volume. That's the hideousness you don't want to see in a stock, implying there could be more pain to come. You might, of course, see a bit of a knee-jerk reaction the other way. We have some news out from China today saying that they don't wish to have delistings and that they will sort of continue to negotiate or cooperate or something like that. But the ball is in their court. They have to change the legislation to make this happen. The question is whether there's a political will for that there or not. Now, what's next? GDPI, that's Polestar. I've actually just made a separate video on that as well, so watch out for that. And also watch out for the Master Stocks course, open for enrollment only this week only, felixfriends.org/stocks. If you want to build lasting wealth with stock investing, this is the way to go. Then I've got all the program for you. I just showed it for you a little bit earlier. We talk about everything from inflation investing to investor psychology to technical analysis to economics that actually matters, investing strategies, the new bonds, and much, much more. So come and join us in that beautiful community. It's completely risk-free like all my programs. All I ask is that you take the program. If you're unsatisfied with it after 90 days having taken it, you can get a full refund. So that's one risk-free thing you can do today. GGPI getting dragged down a little bit by the overall market, but quite a nice long tail candle here again yesterday. So we bounced down to about 1120 or 1160 or so, closing of the day at 1195. Moving average still climbing up quite nicely. We do seem to be accelerating on the dark pool purchases, if this is correct. The CEO Thomas is doing the rounds, the investor presentations in New York at present. That should help. And we have confirmation that the American-made, South Carolina-made SUV is indeed going to go out to the mass market in the second half of next year. So I think lots of positive news there. And this is valued at the moment at about 22, 23 billion US dollars. They are going to deliver their 29th thousandth car by the end of the year. Compare that to Rivian and so on, and you see why people are interested in this stock. Meta, or as I still say, Facebook, well, also falling off a bit here. It fell off quite harshly, actually, to $299, and then people seem to think, look, $300 is basically silly money to pay for Facebook, so it recovered quite nicely to $306. Very little on the institutional front. Momentum definitely negative here, just getting dragged down by the whole market. For me personally, nothing has really changed here. Again, look at the benchmark I've given you at felixfriends.org/Monday and see, look at the numbers, and you still see the strength of Facebook here. Nothing's really unchanged there from that business model, in my view. Now, NVDA. Oops, that's the German listing. That's not what we want. We want the NASDAQ listing. Is basically telling you might want to give the gift of financial freedom this Christmas. So check out felixfriends.org/gift to give beautifully designed gift cards to somebody you care about and somebody you want to have a financial free future. I'm going to put a line down here. Very unusual that we get negative momentum from NVIDIA. The last time that happened was in October, so it's been absolutely ages. It's been a very, very nice long investment run, very, very nice long story here. So am I worried that it fell 4% on Friday? No, I really am not. I mean, you see the amount of growth that we've had here. It doesn't really make much of a difference. We did get another support line here again at the psychologically important mark of $300, which is that green one here. And we closed just above that at 306. So I think everything is still intact there in NVIDIA land. Square, which is going to rename itself Block, much like Facebook have done. So obviously they're going to go more heavily into blockchain and cryptos. Is, yes, not the prettiest chart really. It's been falling ever since 26th of October or so. It was at 262, now it's at 181. So yeah, it's sort of, I think people are looking for direction here. I think that's really what this is about. It's one of these ugly situations, again, significantly increased volume while the stock falls off. So from what the charts are saying here, it could well fall quite a bit more. Moving on in the fintech world over to SOFI. SOFI. We're going to have to move the stock down a little here. Very similar. Can you see the similarity between a lot of the fintechs, including the Visas and the PayPals and so on? They are moving just on that kind of negative trajectory. It's just the segment kind of sentiment at the moment is a little bit negative. I think they all did earnings that were a little bit on the cautious side, and that seems to be biting them in the backside at the moment. There does seem to be some insider sell-offs or some institutional sell-offs here, which could still be some of the original private equity investors who did announce that they were going to get out, and that might be hurting us here. Friday was fairly ugly with minus 7.5%. That's pretty harsh on pretty big volume. I'd like to say when we get those sell-off days, we normally get a rebound the next day, but it isn't true. 2nd of November, we were down 7.95%. The day after, we fell another 5%. So a little bit of caution there. Now, what's our support? Our support is essentially at $15 and $15.30, and we are slightly below that, so that doesn't help much. And then below that, there is a bit of support at essentially $14.50. That's really where we are at, and that was also our low on Friday. You can see that here from the candle. That was basically my green line here at about $14.50. Now we go from ugly to really, really ugly. Barber, avert your eyes. If you own any, it's at $111, down another 8% on Friday, which pretty much means I'm going to have to buy some Barber next week. Is it next week or is it the week after? The week after, because I've got some options that need to stay above $128. Otherwise, I get a load more Barber. Huge sell-off, lots of fear around delisting. I made a video on Alibaba delisting probably about 3 days ago or so, why I think it's fairly unlikely, because they have to offer, I think they need about $200 billion to delist in the US, unless somehow they can convince people to move to Hong Kong. But I think that's also a pretty tough sell, because with all of these dual listed stocks, about 80% of the volume traded is in New York, because that's where most of the money sits. So yes, Hong Kong is a massive exchange here where I am, but it's not the New York Stock Exchange. So that's kind of the concern here. So this is, we are basically just, it just keeps falling. Double digits, entirely possible, I would say at this point. I really, the only thing that saves Alibaba at this point in the short term, it's not its great earnings or its fantastic underlying fundamentals or Charlie Munger. It's politicians, specifically Chinese politicians and regulators turning around going, you know what, we are going to share audit papers with the SEC. We are going to change our law. It will no longer be a state secret. If they do that, the moon is ready for Alibaba. DIDI pouring oil into the fire of the whole thing, really went down 22% on Friday because they're going to voluntarily delist, which is the exact opposite of being delisted by the SEC. So it's sort of odd that the media isn't capable of separating the two stories. They throw it all into one great big delisting pot. Essentially what it means that DIDI is going to list here in Hong Kong. They will then be delisting in New York. Now they're going to have to offer New York shareholders a substantial amount of money to delist. In theory, they could, of course, offer Hong Kong shares as an exchange. I don't know whether people will be willing to accept that. They need to get, from my calculations, at least 66% of shareholders to agree. They might have about 60% or so in the bag from their affiliated companies and their special voting rights, but they still need to get some. And if they kind of ignore the smaller shareholders completely and just sort of write roughshod over them, there would be lawsuits for ages. And you might say, well, why did they care if they're getting delisted? Well, Hong Kong isn't that far away, so they could, enforce those lawsuits and judgments here quite easily. So they would care about that. So generally speaking, you do want to get your minority shareholders on board with delisting to avoid years and massive expenditure and bad publicity being tied up in lawsuits. So, but yeah, it's, the market's knee-jerk reaction here is, oh my God, what on earth is going to happen here? We sort of went up and down quite a bit, and then everybody decided by the end of the day, let's panic. Let's just freak out. It's easier than not doing. So that's sort of the roundup on that. So next week, I expect a lot more volatility. I think for me, what it's all about is look at the really good stocks, look at the stocks with the highest profitability, the best margins, the best ROCE, as usual, all the metrics that I always look at and teach, and buy more of those at better prices than I would have done a week or 2 or 3 ago. So I'm actually quite happy with this in a sense, because I'm in this for the long run. And it's also, I think, a good opportunity, just like this time last year, to think more about diversification and a slightly more conservative plan that'll make you sleep better, and build you more wealth. And for that, I give you the Master Stocks program, which is brilliant. It teaches you exactly that. So jump on it, felixfriends.org/stocks, and take advantage of the 29% off coupon. Build wealth. And with that, I leave you, and I wish you a marvelous beginning to the week.